So again, you know, plan for the worst here. The best policy is document, document, document. All right?
Read four again, please.
Okay.
Date.
Date. Yes, sir. Date, destination, number of business miles, and business purpose.
Now, what does it mean when we say we write this off? Do we get paid 56 cents an hour?
Okay. All right. Now, there are a couple ways that you can write off your car expenses. All right. One is what's called the cents per mile method. And that's where you take the number of business miles that you drove during the year and you multiply it times a cents per mile rate, which changes all the time with the IRS. It's about 55 and a half or 55 cents a mile, I think, in 2011. Last year was 50 cents a mile. And so, and that's quite a bit of money, you know? I mean, if you think about it, if you drive, I don't know, 10,000 miles for your business, which isn't out of the question. I mean, you put a whole lot more miles than that on your car.
So on the last trip that I was up here, I came here, and we went over to Barboursville, came back here, we went up to Heath, I went home, 960 miles.
See, that right there was over almost a $500 tax deduction. So, yes, sir.
You need beginning and ending or just total?
For the specific trips, you just need total. But you do need, this is important, you do need to document your total miles for the year. And here's why. Because, and the best way to do that is, and I know this is hard to do, I sometimes forget to do this myself, but at the beginning of the year, January 1st, write down your odometer rate, okay? If you do that every January 1st, then you know how many total miles you drove during the year. And then if all you have to do is document your business trips, then obviously the difference between the total of the business trips and the total of the mileage was your personal mileage. Okay, now, understand this. It's important to know what your total miles was because the second method that you can choose is what's called the actual expense method. And that's where you take all the expenses of owning and operating your business, your vehicle, and multiply it times the percentage of business use. Well, you have to have the total number of miles you drove during the year to know what the percentage was. So the total business miles, you're divided into the total miles, gives you that percentage. Now, in the first year, you get to choose which of those two methods you want to use. And you can figure it both ways and pick whichever method's better for you, okay? Once you pick a method for a car, a certain vehicle, you're stuck with that method for 4 years, or if you get another car, whichever comes first. Okay, so you want to make the intelligent choice in the first year because you're going to be stuck with that method for the future years until you get a different car. And so, and then in addition to the cents per mile method, if you have a car loan on your car, and in Kentucky we all pay property taxes on the car, you can write off the business percentage of the interest and property taxes on the car in addition to the cents per mile rate if you choose the cents per mile method. I know that's kind of confusing, but the bottom line is keep those 4 things, document your mileage at the beginning of the year, your odometer reading, and keep track of what you spend. And the best way to do that is to have one debit or credit card that you put everything connected to your business on that. And other than your meals, that'll serve as your documentation, okay? So, and then at the end of the year, it'll be easy to add up, what the expenses were. So, okay, so that's on the automobile. Any questions about that? Because that may be your single biggest deduction, is your automobile.
Yes. You designate, say you've got 2 vehicles, and you designate 1 vehicle as total business.
You can, but that doesn't relieve you of the responsibility to keep the mileage alive. Just saying to the IRS, I only use this vehicle for business, so 100% of it is business, that is not good enough. You still have to keep the mileage off. Yes, sir.
Are you saying with the mileage where you get 55 cents, you can also deduct a percentage of the payment of that car?
The interest portion. not the principal. The interest and the property taxes. Any other questions?
The lots for each vehicle.
What's that?
Two lots, if you have two vehicles.
Yeah,
a lot for
you
each.
really do. Mm-hmm.
I've got another question.
Yes.
What right does the IRS have to say that you didn't drive those miles? I mean,
Okay, well-
they're putting the burden of proof on you.
Yeah, the burden of proof is on you because you're claiming the deduction on
Right,
your
but
tax
how
return.
can they prove that you didn't drive?
The burden of proof's on you.
I know.
Guilty till
Well,
proven.
they can just say, well, okay, then you don't get that deduction. So if you want to keep that deduction and what that saves you, then you need to keep the records. Okay?
When you
Yes.
said earlier, the lunch receipts document within 24 hours, the date, amount, due date, and the business purpose. We're talking about just to write that on the receipt. and
That's what I do.
keep it,
Just keep the
your
receipt, right.
Within 24 hours, just so for you.
Yeah, well, they're not going to know whether you did it within 24 hours or not because they weren't there with you. But if all you come into an audit with is credit card statements and bank statements, they know you didn't do that. So that's why you need to have the receipts.
What if you have been writing this, got the receipts for check and write names on them?
I mean, you
Go
know.
back and write them.
Hey, can I say something to
He
that?
said that.
Hey, can I, now, I'm not on camera, but I
Yeah.
think you ate with Mickey and Tommy and.
Yeah. Technically, you, under the law, you don't have the right to reconstruct that. You do have the right to reconstruct mileage. Tell you a quick funny story. I was representing a guy that didn't know that he had the right to reconstruct his mileage. You can do that after the fact, and the IRS will accept that. It's sometimes more difficult to do it. I mean, you're going to lose probably 20% of your trips if you don't keep it contemporaneously. But you can go back and you can look at diaries, calendars, bank statements, credit card bills, and get some hints as to where you were on those dates, and you can reconstruct a mileage log. But I had a client one time that he sent me his mileage log, and it was like the day before the audit I got it, and he told me, he says, I've been up for 3 nights doing this.
Oh my goodness.
And I was looking at it, and I was like, gosh, this looks like you kept it. I mean, there's coffee stains on it. You got all sorts of different colored pens and pencils. He says, yeah. He says, I did that. He says, I stepped on it. He says, I spilled coffee on it. I said, you didn't have to do that. I said, you got the right to do this after the fact. But he was trying to make it look like he kept it all along. So anyway, all right. Meals could potentially be another big deduction for you. You get 50% of restaurant meals, okay? If you have like a home party and you go to Kroger and you buy the stuff, you get 100% of that. Your cell phone, just last year, they came out with a ruling, it was last summer, that said that now they'll give people automatic 75% business use without substantiation. Very few times have I had an IRS audit where they wanted a usage log on a cell phone. And the best way in the past to have done that was just to get the detailed billing from the phone company. It shows every number that you called. And you know, nobody does this, okay? But I mean, the IRS kind of thinks that everybody should do this. You go down and you say, oh, well, that's a business number, that's a personal number, and you know, nobody did that. So they came out with this rule that everybody can take 75% business use. Now, if you want to claim more than 75% business use, then you need to do that, okay? Nobody does that, so take the 75% is my advice. Internet service, this is another thing that I've had a few audits where the IRS has said, well, you know, it seems like that's a high percentage of internet that you're using. You know, don't you have kids? Don't you know? Just kind of be reasonable. You know, don't claim 100% because everybody knows that you got to use it for some personal use, but you know, be reasonable. Nobody keeps a usage log, although that's probably what some of these school auditors would expect you to do. Certainly the costs of joining, paying the monthly fee, the cards, all of those things, 100% tax deductible. Travel, let me give you kind of an interesting scenario on travel, because I get this asked a lot. When you take a business trip, there's specific rules on what you can deduct, and there's two kinds of expenses. There's transportation expenses to and from, and then there's expenses while you're there. And I'm going to discuss both of those separately because it's two different rules that apply. This transportation rule is very simple. If more than half the days you were on your trip were business days, then you get 100% of the transportation. If less than half, then you get none. It's an all or nothing proposition. So if you want to get your airfare or however you get there, you got to have more than half of the days as a business day. I'm going to define a business day for you in just a minute. All right.